Berkshire Hathaway CEO Warren Buffett is arguably in a league of his own when it comes to investment success. Buffett's own wealth has risen from roughly $10,000 in the mid-1950s to $114 billion as of this past weekend. It's worth noting that this figure excludes the $41 billion he's given to charities since 2006. For decades, riding on Warren Buffett's bandwagon has been a profitable venture. Because of Buffett's stellar track record, Wall Street and ordinary investors are keenly interested in what he and his investment team are buying and selling. After all, riding the Oracle of Omaha's coattails has proven to be a highly rewarding endeavor for decades. The Securities and Exchange Commission received the much-anticipated Form 13Fs last week. A 13F is a quarterly filing required of money managers that handle at least $100 million in assets. In basic terms, it shows what fund managers such as Warren Buffett bought and sold over the most recent quarters, in this case, the fourth quarter of 2021. Berkshire Hathaway, for example, has rushed into telecom company Verizon Communications, NYSE over the last 18 months according to 13F filings. Buffett normally builds up positions over time, but since mid-2020, he and his team have spent $9.4 billion on Verizon stock. Given Buffett's fondness for dividend companies, these large purchases of Verizon shares appear to be a wise method to produce dividend income in a low-interest environment. Buffett's conviction in Apple, NASDAQ AAPL, Berkshire Hathaway's largest holding, has also been revealed through Form 13F. Berkshire Hathaway's cost basis on its 907.6 million Apple shares was around $31.1 billion, according to the company's 2020 annual report. With the exception of Bank of America, Verizon, and Occidental Petroleum's preferred shares, Berkshire has no single position with a cost basis of more than $6 billion. This underscores Buffett's confidence in Apple CEO Tim Cook and the company's strong capital return policy. You won't find $51 billion in purchase in Berkshire Hathaway's 13F. But what if I told you there's a stock Warren Buffett has been buying for the past 3 years that's roughly equal to Apple's $31.1 billion, Bank of America's $14.6 billion, and Verizon's $9.4 billion total cost basis? What if I told you that you won't find any evidence of this acquisition in the 13Fs Berkshire Hathaway files with the Securities and Exchange Commission on a quarterly basis? Buffett and his right-hand man, Charlie Munger, have spent a little more than $51 billion of their business's cash hoard since mid-2018 on shares of a single company they believe is clearly undervalued. Berkshire Hathaway is that under-the-radar firm. Berkshire Hathaway's board of directors approved new share repurchase policies on July 17, 2018. Buybacks are possible without a cap as long as the business has at least $20 billion in cash, cash equivalents, and U.S. Treasury bonds on his balance sheet. Warren Buffett and Charlie Munger agree that Berkshire Hathaway is trading below its intrinsic value. Berkshire Hathaway has a lot more to offer than record buybacks. The benefit of share repurchases is that they can increase earnings per share, making a profitable firm appear more fundamentally appealing. But Berkshire Hathaway has a lot more to offer than just a strong repurchase program. Buffett and his staff, for example, have crammed cyclical businesses into the company's almost $343 billion investment portfolio. Companies that are cyclical perform well while the U.S. and worldwide economies are growing, but struggle when the economy is contracting. Buffett understands that economic downturns are unavoidable. However, he is aware that recessions normally endure a few months to a few quarters, whereas periods of economic expansion can span years, if not a decade. Buffett's determination on holding his company's investments for long periods of time is one of the reasons Berkshire has outperformed so much since the mid-1960s. Berkshire is able to benefit from the natural expansion of the U.S. and worldwide economies over time, thanks to these multi-year and multi-decade holding periods. Buffett's love of dividend stocks is another reason Berkshire Hathaway is such a terrific company to hold. Berkshire Hathaway expects to earn over $5 billion in dividends this year, with more than $4 billion coming from only a half dozen firms. Berkshire Hathaway's yield on cost is roughly 5% when compared to the company's cost basis. Dividend stocks are frequently lucrative, well-established companies with clear long-term prospects. To put it another way, they're the ideal spot for one of the world's most successful investors to put his money in the long run. Thank you for staying with me to the end of the video. I hope you enjoyed it. If you did, like and share the video. What do you think about Warren Buffett's massive stock buyback? Leave me your opinion in the comments section. Don't forget to subscribe and hit the bell icon to get notified when we add new videos in the future. Thank you for watching, and we'll see you in the next video.